Welcome back to Trading 360. I'm Caroline Woods. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein is here to take us through the charts, and here to take us through the trades is Alan Nuckman, Chief Market Strategist at bullseyeoption.com. Ben, Alan, so good to have you both here with us. So, Alan, we're going to start with you and your first trade. It's Amazon. It's lower today, off about 1.4%. Tell us what you're doing with this one.
Well, unlike your previous guest, I'm very encouraged, not discouraged by what the markets are doing. Let's remember, we went from 0% to 5% in less than a year as far as rates go, and the market's down maybe 12%. So I'm very encouraged. We're 15% off the lows in the S&P. And if you look further out, in 2024, rates are going to be at 4%. And then from there on out, from 2025 to 2030, rates are down to 3.5%. So I think the markets have done very, very well, and I'm very encouraged by this action.
So what would your trade be for Amazon, Alan?
Well, Amazon has been a stock that hasn't bounced off this bottom just yet. We're stuck in a range between 80 and 120. Now, compared to something like Meta or Tesla that had big bounces off their bottoms after a straight down move, same kind of thing is what I'm looking for. A short squeeze here, some value play. I'm seeing bullish divergence, meaning it made new lows but not new highs and implied volatility. That's a sign of a bottom. And you're looking for a sentiment shift. And you're also seeing a lot of leverage buying at these levels. So we've been 5 months in this range. A breakout of this range, this 40-point range targets 160. 100 is kind of the pivot point. If we can get above that 100, then we get a pop to the range top at 120. I'm looking at the May option, the May 85 call, which is very near that low. It's trading for about 15, and it's $11 in the money.
All right, Ben. So Alan's optimistic, encouraged by this market. He's bullish on Amazon. Are you going to pour cold water on this? Are there reasons for optimism here based on the chart?
Cold water here comes in a big way. Ice cold, Caroline.
Splash.
I'm just a little bit skeptical of Amazon. Trending lower on the intraday time frame, trending lower on the daily time frame. Recently failed at a key area around 117. We spiked up and we're coming off, and here you can see that trend that I was talking about. We're going all the way back to August. This is the 4-hour candles, around 147 down to 81. Alan mentioned we've been in a bit of a range. Here it is, 120 to 80. Here's that spike up I mentioned to 117. And look at how that spike, Caroline, tested a key area of resistance that was established on the way down. It was unable to take it out. We bounced around 142, 128. We're establishing areas of value at lower and lower levels, currently around 92 right now. Yeah, we did spike up to 117, but look, that was the middle of the area that we formed prior to the one we're in. Basically since, well, we're going all the way back to the end of October here. Again, 120 to 81. So I want to point out, no rejection of this working assumption that we're trending lower, no rejection of this area of value that's forming on recent lows here. Take a step back with me from the 4-hour candles, because I want to show you it's not just basically going back to August. Look, this goes all the way back to June, July. We're talking of 2021. We were up at 188, again down to the recent lows around 80, and a similar pattern playing out here. You can see it, Caroline, right? In this instance, balance formed around 176 into the beginning of 2022. We broke down. February of last year, we were around 150. We broke down again into the summer of last year, around 23. And here you can see currently around this 95 area since the fall of last year. Now, let's take another step back. So we've established we're trending lower on the 4-hour, trending lower on the daily time frame. Look where we are on the 50-day moving average, just above it, holding below the 200, which for me, again, kind of in line with the trend we've seen. Look, a few tests of the 200. Each instance we failed. What I'm noticing here is RSI is actually accelerating to the downside. Could be opening up a door for a retest of the lower extreme test of 81 if we get continued weakness through this range that Alan identified, 120 down to 80.
All right, Alan, I want to give you the final word on Amazon before we move on, now that Ben's poured cold water on it. He's skeptical about it getting to that $120 level. What do you think?
I could bring up a lot of stocks that have a similar price pattern over the last months that we've done on this big three. And again, it's about the strategy as much as the stock. You're buying a limited risk option. Who doesn't want to be long Amazon from $85 and have 3 months of time for this stock to make a move? I'm going to use Ben's words against him. Consolidation. Consolidation right now. We're consolidating between 80 and 120 for 5 months. The midpoint's 100. We push above 100, then we're going to go test those range highs once again. And guess what? If we get anywhere near those range highs, 117 again, this option doubles in value. That's 100%, my friend. That's how to play the game.
All right, so still friends, but let's move on to the next one. Alan, your next trade is Cisco Systems, another bullish call here. Cisco off less than 1% today, only up about 2.5% so far this year. Tell us about that trade.
Well, Cisco is a stock that finally had a technical breakout. It had been trading between 40 and 50 for 9 months or something, 10 months, and it broke out last week. Now, I liked it a couple weeks ago, but I knew those earnings were coming out, and I didn't want to be surprised by something negative. Now, actually, there was a positive reaction to earnings, and it popped. But now we're getting a second chance as it comes back and fills that gap. So I'm looking at that 50 level as something important to keep an eye on here. And so I'm looking at a July option, a July 45 call. It's got 5 months of time. That option's trading for about $6, and it's $5 in the money. Again, it's like being long from 45, and a modest move in this stock. The breakout of this range targets 60. If we get to 60, this option's worth 15, which is more than 100%.
All right, so Ben, Alan talked about that technical breakout. What are you looking when you look at the technicals for Cisco?
Alan, Caroline, when you have Alan and myself on the same show, a small win is both of us agreeing on, in this instance, a pivotal area, as Alan pointed to, that $50 level. I'll show you exactly why I think so in just a second. But first and foremost, trend environment to the upside, a bit of a different scenario than what we were talking about with Amazon, from 38.60 up to 53.60. Currently, chop trade right now just below that $50 level. But let me show you exactly what I'm talking about here as I look at this hourly time frame. Areas of consolidation that formed to higher levels. Trend environment since mid-October, 42, 45, and again, currently forming around, there's that 49, that 50 level that Alan mentioned. So that is significant in terms of a pivotal level here, at least on the hourly, and you can see we're trending higher. Taking a look here at what's going on in terms of the daily. This is a little bit of a different story. It does really speak to what we're seeing as far as the range-bound type price activity, the significance of this 50 area, right? We've got an upper extreme 64, lower extreme 32, and look where we are, smack dab in the middle. So strength up and through this favors a retest of the upper extreme. Weakness, if we roll over, favors a lower extreme test around 32. Moving away from the daily candles, I wanted to show you what I'm looking at on the weekly. First and foremost, I saw a bit of a reverse head and shoulders pattern that formed, again, the lows 2018, 2020, the pandemic, and then recently, again, this $37, $40 level. And you can also see how the middle of this range coincides with that $50 level, again, going all the way back to 2017, pre-pandemic levels. And then I wanted to just show you what I noticed here as far as areas of consolidation that have formed. Speaking of that 49, that 50 area that Alan highlighted, what's a buck between friends, right? But look at this, 26, 49, very well-defined trend higher, but yeah, consolidation. Getting back to what Alan was talking about before in terms of Amazon, you can see Cisco no stranger to that. So there's opportunity with this in this range, but I still see a trend environment to the upside here.
All right, so we can agree on, well, you can agree on one. So Alan, I'm almost hesitant to go on the next. But before we do go on to the next, I do want to ask you, because obviously Cisco, Amazon, both tech plays, very stock specific in terms of these trades, or would you be comfortable being a buyer of tech at this point, given how encouraged you are on how the market's reacting to everything going on?
Well, I'm an options trader, and it's all about risk reward, and it's all about math and probability. I position myself for success. Now, Ben's going to say everything that I throw out here, he's going to say not yet. But the point is, if I'm in a position, a limited risk position, and by the time the chart gets to the point where he's going to say go, I've already made my money. So that's the point here, is by the time we get to the 60 level, which is a target in Cisco, or we get to the 117, 120 level in Amazon, we've already doubled our options, and we can cash out and, you know, be successful. That's the way that I trade these markets. I use options as a vehicle, and I have plenty of time for these charts to develop with limited risk.
Okay, so let's talk about your final trade, SLB, formerly known as Schlumberger, the oilfield services company. Why are you bullish on SLB?
Well, I'm bullish in the oil sector just from a fundamental standpoint. It's been hanging around these lows here, and the Fed got their intended goal of knocking crude oil prices down off their highs. That's what's happened. Now, the dollar's had a little bit of firmness here recently, but I'm seeing that as temporary. So more downward movement in the dollar is positive for crude oil, and it's also positive for the macro market. If we see the markets come back, that's positive for oil. So simply, this is a stock that's stuck as well between 50 and 60. It's coiling, and we look at that like a loaded spring, building and building energy so it can break out of the range target 70. So I'm looking at the May 47.5 call, which is below that 50 level, and looking to position for success with that oil market, which has been the strongest sector that we've had. Yes, we've had a pause over the last 3 months, but the strongest sector over the last year and a half, obviously.
All right, Ben. Is Alan right? Are you going to say not yet for SLB?
Well, let me just say that Alan brought our attention to the $50, $60 level. I think that's key as well. I'll show you exactly how my eye was drawn more towards 55 than that 50, 60, but it's the range that we've been in. Towns Point, first and foremost, trend environment higher. You can see it's well defined from the $30 level back in July all the way up to, well, we'll call it 60 to Alan's high point there that he was referencing. And here you can see, again, I like to look for these areas of value that form 36 throughout July, August, into September. We break to the upside. You get a high conviction trade, a breakout phase, initiative phase, and then we go back into that overlapping rotational around 42. And here you can see this repeating itself a couple times actually throughout the middle of October as we break out to the upside and then go again sideways. Alan's point, 50 to 60 is the range we've been in since end of September, October, and I've got my eye on the $55 levels, somewhat pivotal. We're below it right now, but given the benefit of the doubt to the bulls, considering the underlying trend here, stepping away from the hourly, you're going to see, hey, that underlying trend we just looked at and that move up from 30 to that 60 level, that's just a small blip on the radar in terms of what we've been seeing as far as the bigger picture. We're going all the way back to the spring of 2020 there on the left side of your screen. And in this instance, again, a very well-defined trend environment, 18, 28, 35. And again, this 55, 56 area is very much pivotal in where we are right now. So here you can see benefited out again to the bulls. As long as they're holding above 35, they're expecting to see a new area of value form at a higher level. Crude oil, kind of struggling recently. It seems like somewhat range bound. I saw a couple large builds, and we've seen inventories on the rise. Taking a look here real quick, SLB hovering around the 50-day moving average, which really speaks to the significance of that 55, that range we're in, well above the 200, speaks to what Alan was talking about in terms of longer-term strength with crude oil that's been doing well. You can see briefly below the 200 back in June, July, around 30, 31, but it didn't spend a lot of time down there, and we saw limited migration of value to the downside. The one thing that has me a little bit concerned, RSI has been coming off a bit here. We've been seeing some lower highs. Something to keep an eye on, especially if it continues. It could lead price lower at this point, but definitely watching here. Again, trend environment to the upside here and at a pivotal area in the middle of the range that we've been establishing.
All right, so Alan, almost sounds like an agreement. So 2 out of 3 isn't bad, but we'll have to leave it there. We're all still mostly smiling here, it looks like. Alan Nuckman of BullseyeOption.com, Ben Lichtenstein, thank you both so much for being here. Coming up next, we're going to spotlight Etsy following its earnings report. We'll talk to the analyst at Morningstar who covers the stock and get his thoughts next on Trading 360. Stay with us. We'll be right back.